You're watching Market Guru. I'm Ashudat, and Nabha is, of course, with me right here. And today we'll speak to Porinju Veliyath, Managing Director and Portfolio Manager at Equity Intelligence. Porinju, thanks for joining us. I noticed you've added a lot of these food stocks, ADF Foods, LT Foods, Flex Foods. Share with us, if you could, the rationale behind this.
Good morning, Ashu and Abba. It's, I don't know, you're starting with some stocks. So some of them are my personal investments. Basically more than food companies, Ashu, what I have been doing is, looking at some of those companies in the mid caps and large small caps, I would say, which are well managed with some kind of decent balance sheets. And maybe they are small today, but India kind of an opportunity. They can take advantage and grow very big in the next 5 years and 10 years. So I'm identifying some of small companies. That's the only way, today we can make multi-baggers in the market. Because if you see the last 3-4 years, there were a lot of multi-baggers. Even some of the stocks I have been discussing on this channel have gone 10 times and 20 times in the last 2 years. So that was a season of, very easily you could have picked multi-baggers. That's what I feel. But that era is getting over. So now we have to be really working hard to find the potential multi-baggers. So this is one strategy I'm looking at, where you are a bit comfortable with the management. You won't get everything perfect. If you want to make a multi-bagger, you have to compromise on some aspects of the company. It could be related to the promoter quality. It could be related to the, the balance sheet. Maybe they have some kind of debt and kind of things. Maybe they were not growing in the last few years. So at the same time, some of these companies, which were consolidating and getting restructured, they were not showing much growth in the last few years. So it's maybe they are now poised and for a big growth ahead for next 5 years. Some of them are at an inflection point. I'm telling you, there are a lot of companies like that in the small and mid-cap segment in India. And that's why I always talk, India continues to be a paradise for stock pickers.
So, Porinju, since you look at longer-term horizons, I did go back to some of the stocks you mentioned and looked at the 10 years. So this ADF Foods that you have lately bought hasn't really done anything. In the last 10 years, it goes from 20, goes up to 100, falls back to 40, goes back to 100. Last 10 years, it certainly doesn't seem to have shown any multi-bagger thought process. Could you share with us then, what are you looking at? Because the quantities you're buying, I'm just wondering, when you want to exit, who's going to pick it up from you? Because these are not institutional stocks.
I will sell in a forward circuit when it goes away 3 and 4 times. See, again, one more thing, Ashu, I have never suggested or recommended this idea of ADF food. I just personally bought it. I think yesterday you might have seen my bulk deal. That is why you're asking, I feel. It's not very important, I'm telling you. See, don't stick to one stock. India, the kind of variety of stocks India offers, Indian markets offers. And the macroeconomic scenario in India, I'm telling you, it has never been so beautiful with so much visibility. And that too, at a time when the global economy is so fragile and going through too much uncertainty. So look at that big picture of Indian economy, how things are happening. Now stock markets are traded at record volume. This is something I had predicted in some maybe few months back in our this channel. The money flow, what is going to come to Indian markets, it is going to be amazing. I'm more excited about domestic potential than the FIM fund flow into the market. We will see 10, 20, 30 billion kind of fund flows in every year. So that is one aspect. Then people say, okay, just because of liquidity markets go up, that's not healthy. But here, luckily, we have the other aspects. This liquidity comes, capital market get buoyant, and a lot of things, all these things goes together. Then the corporate earnings start picking up. And most importantly, Ashu, what is happening in India today? Government has talked about, and they are doing many, many important projects in infrastructure, in railways, in defense. There are a lot of things happening in waterways, inland waterways, national waterways. This has never happened in this country. So many projects, and that also large projects, and the large number of projects, and involving lakhs of crores. So this is something which will reflect in the corporate numbers on a later time. It may take 1 year, 2 years, but if people wait for the numbers, they will be disappointed. And if you wait for numbers, then you have to buy the stocks at 2x and 3x kind of levels after 1 year, 2 years. So the opportunity today, investors should develop some insights into the future. How these companies are placed to create wealth for you in the next 2 years and 3 years, maybe 5 years time. If you get that kind of a visibility, looking at the business model, the promoter's attitude, very important, and how the infrastructure of the company is going to help it, the manufacturing facility or the brands or the distribution network. I'm telling you, it's a real paradise for stock picking. There's no doubt about it. And now coming back to ADF food, I'm not very sure this will be a multi-bagger kind of thing. But I see symptoms where the promoters, the management is changing their attitude. They are getting more, dynamic, and the products are good, excellent brands. So please don't buy this stock. I'm not suggesting this stock. I bought it, and because you're asking me, I'm just telling why I bought it. So, but the stock has already gone up. Don't buy at higher levels also, because we have so much variety, as I told earlier. If one stock fly away, you can get another stock at a reasonable kind of valuation. And one more thing, Ashu, very important. See, now people are after the few fancied stocks in the market. I saw some of the NBFC companies, the way they were flying. I remember I suggested Capital First on this channel at around 200 levels last year. And now I think, see, I'm not talking bad about these companies. These companies are blue chip companies, well-managed companies, Bajaj Finance, everything is perfect about them. But the same money chasing repeatedly these stocks, it can come to some kind of, rich and beyond that kind of valuation. So small investors need not really jump into the bandwagon and, because be price sensitive. We have a lot of them. And don't just buy at very, very high valuations just because everybody else is buying.
In fact, I was going to ask you about that, Porinju, because you tweeted yesterday saying that select NBFC stocks are too hot and rich in valuation, being chased by too many funds. Don't need to rush in to buy due to FOMO. So, sound advice, but I think, nonetheless, the theme is just actually so attractive right now that we are seeing investors rushing in. Would there be any way that you would suggest, sort of being invested in this theme in some manner? Any stocks that you would be looking at within the pack, or would you book profits, perhaps get in again at lower levels?
No, this booking profit and buying at lower levels is not my cup of tea. That is traders and gamblers do that. When you are bullish on a business model and a company, the promoters should stay invested, and you should leave that small ups and downs. That is called real value investing. Now, because you asked me, I'm telling you one sector I have discussed it earlier also. See, investors should try to identify the change of paradigms happening in some groups, some promoters groups, or maybe even we discussed about while discussing on TCS last time, I remember. Now Tata Group is changing. After maybe 10, 15 years, I can see the symptoms of Tata Group changing for better. Better for shareholders, I mean. That is a very, very major shift in the policies of this Tata Group. Tata Group earlier was functioning very unethically, I would say, when it comes to the shareholders' value creation. They were looking at expanding, growing big, and all the major CEOs and all the directors of all those companies benefiting and, having a great life. But companies are supposed to work for the shareholder wealth creation. Now there are symptoms, and Tata Group started talking about profitable growth and consolidation and not just expansion. So these are very, very important thing happening, with a long-term change of fortunes. So I am very bullish on the consumer business segments, of Tata Group. There are a few companies in the consumer business. I think they are totally underpriced, and they have frustrated the investors for a long period of time. But I think they are at an inflection point. There are symptoms. When Cyrus Mistry, the new chairman, the way his attitude, the way he is giving pressure to the CEOs of these companies to perform, especially with regard to the bottom line, I think this is a segment to watch. Similarly, I would say, even Anil Ambani Group, I see some changes, some symptoms of changes happening. And the perception has been very bad for the group for a long time. And many of their businesses are very highly leveraged, a lot of uncertainties. some kind of dull times. They are into finance, into power, infrastructure. Now defense is a big focus. This is the information what I can see from the public domain, what are available. So these are symptoms of consolidation, restructuring,
Right.
and being more conservative for the future. So some of those companies can create wealth.
I just want to come back to my earlier point for a moment, Porinju. I hear what you're saying about the business houses to some extent. But with regards to the financials, are you saying that it's, if you're talking about a business model that is looking good regardless of market direction, would you still want to hold NBFCs in your portfolio? Do you hold any of them? Would you stay away from them altogether? I'm just asking because, FOMO aside, I know some of these stocks have run up, but it does seem to be a sort of pocket of the market that's bound to see growth going ahead, given the way the economy is shaping up.
Yeah, growth, definitely India offers big growth for these NBFCs. We are to penetrate, this kind of services in a big way in this country, considering our demography, 1.25, 1.3 billion people. And a lot of them are getting into the middle class, and middle class people are getting transformed into the upper middle class and rich. So this is something, it's a very, very important period of time India is going through, our economy is going through. So finance, the NBFC activities, even equity related, the capital market activities, that's all got a long way to go. I'm very bullish on that. But the problem is when it comes to me, today, the same thing I was talking 1 year ago and 2 years ago. And those stocks have gone, many of them have gone 5 times, 3 times. So the fundamental, the economic environment and the operating environment has not changed much. If you have got real insights into the future, if you have a basic knowledge about Indian economy and its structure, all these things existed even a year ago, 2 years ago. So something which was available at 100 rupees 2 years ago, you are buying at 1,000 rupees today without any significant change in the long-term fundamentals of the industry and the company. So at that level, it may be a bit hyped. I'm not telling. But if you are into the right company in the NBFC, and the price may be a little stretched today, but continue to hold. My advice is to the newcomers. See, a lot of people enter into our markets, especially small investors. They should not just, get fooled by those kind of valuations. And because they start buying it instead of 100, they're buying at 1,000 rupees today. So that is not something, they will get frustrated because the stock may not go up for some time. So that is, that we can avoid that. Those kind of people, let them look for opportunities where it is not highly fancied today, but it is fundamentally strong. And, this economy is giving a lot of opportunity to that business segment, and to the company in particular is well managed. The promoters are changing. The balance sheet is improving. They are repaying the debt. They are buying back shares. See, these kind of developments are in plenty today. That is where you can make fast money also, some traders I am talking about. So India is so dynamic market. There is no other markets in the world today which is looking so attractive despite its high price earning multiples. Now, everybody is concerned. People who try to think conservatively, they are talking about the price earning multiples. It was most when the markets were very bad. So I had explained this once. See, the price earning multiple is high because we have a visibility going forward. Next 2, 3, 5 years, how Indian companies are going to take shape and create wealth. So which is lacking in other places. So you may find some other market, emerging market at 10 PE. We may be at 20 to 23 PE. But I may prefer to buy this 20 to 23 PE because of the visibility going forward and the jump in the earnings which can happen. See, our economy has never gone through such kind of dynamic era, I'm telling you. Now, the bull market started in India 2 years ago, 2014. It is not made for a month or year. I'm telling you, this is going to go at least next 1 or 2 decades from an economic perspective, because we are too small an economy. Right. We are finding it very difficult to feed our people, 1.3 billion people with this economy.
Porinju, I just wanted to share with you some statistics. And George Soros says markets always have reflexology, which is when demand goes up, supply also goes up because it readjusts to the demand. I want to share some statistics with you. At the same time in 2006, which is 10 years ago, the Nifty was at 4,146. Maybe I may be off a little bit. We are now at 8,657. So for all the growth in 10 years, all I have is a 100% return from the Nifty, which is basically 10% a year. So I just wanted your thoughts on why that's the case. And one of the reasons I picked the stocks you have, because that'll give me an indication of how you think or what's your thought process. Talwarkers, I looked at the 10-year chart of Talwarkers also. In 2011 or 2010, the stock was at 291. It went up to a high of 400, which back to 232. Just your thoughts, Porinju, because one of the biggest challenges for investors is to take this whole great thing about the economy and then plug it into a stock and then make money. Because when I look at the index, you just made 10%. You could have done that exactly with a fixed deposit in a bank.
Yeah, you're talking about from since 2006.
Yes.
Yeah. But this is for the normal investors and the large funds to create almost near to around the market-related returns. But Ashu, what you and me should realize, and a lot of your friends, perhaps they have made 30, 35, 40% kind of CAGR in this period. The stock pickers I'm talking about. So my role in the market or as a fund manager, I'm a stock picker. I don't go by, I sometimes tell my people, who gives apprehension about the market, Porinju, how can I invest now? The market is so hot. So I say, we have nothing much to do with the stock market. We never buy the market. See, we are bothered about the companies, what we own. So this should be the strategy and perhaps the thinking of every investor in this country. That can make a sea change. So the market will never get overheated, or it will go to unusual or irrational depression also, Now the volatility is so high, a lot of people are staying away from the market. But for that aspect, Ashu, I am telling you, India going forward will not be that volatile. You will see stable market. You will not see the kind of 2008 or later. You recently had that January, February crash, especially in the mid caps. Many of them went by 30, 40, 50%. You will not see going forward that kind of a volatility, especially the irrational volatility. There will be some more soberness because of the fund flows. Especially, as I told you, the SIP is again a game changer in the market. It started coming in. Considering the structure of our demography, SIP can be the biggest fund flow into Indian markets in the next 2-3 years. You will agree with me. Now we are at around 1,500, 2,000 crores monthly cash flow. This may go to 3,000, 4,000 crores very soon. And this can be, I'm telling you, 20, 30,000 crores kind of monthly inflow into Indian equity market from the middle class of India. This is going to be a major game changer, and that will keep the market more stable. Because every month the money comes, whether the market is very hot or the market is very depressed or the market is sober. So that is something, it will be a big stabilizer for the market. Markets will be more healthy going forward. FIIs, they may buy or they may not buy. I don't care, in fact. That's not important for Indian markets over a period of time, in the long term.
Porinju, a quick check on real estate as well. I know you've been actively looking at some of those counters. Is this again from a much longer term perspective on the fundamental side?
Yeah. Real estate, we used to discuss this a year ago and 1.5 years ago, I remember. So one of the stock I used to talk very highly about was Anandraj, which I have a large holding under PMS. And that stock has gone up well. It has almost doubled from the recent bottom also. But the fancy is still not there in the market. And there are challenges. See, I'm not telling there are no challenges. Real estate sector, because of oversupply, which will be again temporary. It may take 1 or 2 years more. But real estate development is very important going forward, considering India's again structure of the economy and the demography. We need to build a lot of homes, and we have to build a lot of infrastructure. And real estate, some of those very good players in real estate, those who have got execution capability, now there are blue chip companies. Once I had tweeted with the blue chip real estate companies, the middle level and the penny kind of businesses, because of the balance sheet problems and all. So investors have a large choice in that. So if you want to play very safe and make something like 20-25% kind of CAGR next 5 years, I feel that companies like Godrej Properties, maybe Shobha Developers, there are many blue chip companies in India which are well managed with a clean balance sheet and healthy balance sheet, and the brands, trust factor, these are important when you develop real estate. So I think investors can look at that. And people who want to make quick money and all can wait for corporate events, consolidation, restructuring. A lot of that is happening. And the debt, too much debt companies, I think there is no clarity. One can only trade or gamble on that. I have no comments about them.
Porinju, just wanted to get your views on, do you suggest that investors stay invested, or do you suggest that investors time the market? The reason I'm asking you this is because if you stay invested, then what happens is you run into a situation like we saw with real estate stocks where, India Bulls real estate was at 400 or a Uptown was at 5,000 and just collapsed. Or an Educomp, which was at some 5,000-6,000 and becomes 12 rupees. Or what you mentioned, which is stock picking. In that, then you have to go with intrinsic value and pick, the stocks at the right time and basically go with the timing. What would be your philosophy? Should you time the market or should you not time the market just in terms of kind of doing better returns than the index?
Yes, Ashish, it's a very good question. I appreciate that. We never time the market. But we are aware about what's happening in the market and generally the opportunities. If there are no opportunities in the market, I will stop taking funds from my investors, potential investors. So that's our philosophy. But we haven't done it for the last 13 years since we started that. And I don't think for next 25 years, I will stop taking funds for India equities. That's my confidence. Because looking at, again, the structure of economy, that is what I'm seeing going forward. And you asked me whether investors stay invested. Yes, investors, normally they stay invested if they're investors. If they're not staying invested, they are not investors. And they time the market, they try to sell it when it's hot and then try to buy it back later. That is called a trading activity. See, genuine long-term investing is, value investing. People stay invested. But again, when you buy, you talked about Educom, people bought, only crazy people bought it at higher valuation. At that levels, there was enough. Many people are talking this is like a fraud company, there were balance sheet issues. So it was a rigged up, operated stock at high prices. Most of the smart investors in the country they were knowing it. But some, again, as I told, some new investors, they come and get trapped into that. That is why the fundamental, suggestion, the advice what I always make, be price sensitive. Don't just buy because it is fancied. Now NBFC is going up, it is very hot, and you go and buy it. People are not thinking, what is the PE today? How many times the book value this company is traded? What is the projected growth? Yes, they're not thinking about these things. Okay, now NBFC is going up, just go buy it. I was very bullish on Muthoot Finance, at 160, 165. Even earlier, 2 years ago, we bought it at nearly 100 rupees. We bought the stock in PMS also. We booked profit, of course, we're not holding today. So, but the company, nothing has changed. The gold price has improved a bit or stabilized. That doesn't make any huge difference to the long-term fundamentals of this company. So I'm not telling Muthoot is bad or good. This is like I'm just telling, one need not buy when the stocks go multi-baggers in a short period of time without change in the long-term fundamentals of the company or the industry environment. Be conservative. And I'm telling you, India offers so much opportunities if you are keeping your eyes and ears open. Come to the mid-cap stocks. How many of them? Hundreds of them, I'm telling you. I can see few hundred stocks in our mid-cap and small caps, which will go up by 5 to 10 times in the next 5 years' time. That is a huge wealth creation if you can identify a few of them. And when you make a portfolio of 5 or 6 or maybe 10, 2 or 3 may not work. It may not go the way we expected. It may stay stagnant. And one of them can go down by 50%. But 4, 5, 6 of them may go 5 times, 10 times. So you make your money, big money.